Welcome to the October 15th, 2018 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. A terse spanking for tech this week. That's our first topic. Is the party over? And we'll cover where the bargains may be at NetWorthRadio.com in this weekend's program with more charts and graphs. I'm Spencer McGowan, your financial weatherman, President, McGowanGroup. Thank you for tuning in with us for a fast-paced tour and a graphic tour of the global financial markets each week right here, YouTube, McGowan Group. Subscribe and you'll get updates anytime there's fast-breaking news in the financial markets. Here we go. This is the FANGs Index, Facebook, Amazon, Apple, Netflix, Google, plus a few others. They make up the tech rally that we can see. Most recently, if we look at tech, we made some new highs, but we've entered what appears to be some sort of correction phase for the tech stocks. Amazon and the others pounded this week. That led to overall declines in the indexes because they've grown to such a high percentage. And you can see the Dow and the S&P, both the Dow chart here in just a second, the S&P falling from near 3,000 to a low near 2,700. It was about a 6% correction, 1,600 Dow points in the middle of the week. Does it mean the whole party's over? Let's put it in the context of the Dow right here. 27,000 almost. And then, of course, a spanking for tech led the way down in a correction that totaled about 1,600 Dow points at the low, then a Friday rebound. Is that correction over? Is the bull market cycle over? Well, there are areas with bargains, but one thing that happens, especially after that kind of correction, lots of predictions that the end is near come out. We'll cover some of those more salacious predictions also in this weekend's program at NetWorthRadio.com. You can see the peak in the Dow before the winter storm, and you can see the 27,000 right here. This actually falls back into a range-bound category, so yield may be very important going forward. Is there a debt crisis in the United States, as the New York Times put out just recently? We want to cover some areas here because record debt has been part of it. We'll cover that after we cover oil. Right now, this is oil right here, moving from 27 to a high of 75. It corrected this week around 70. The pipelines could be the best income bargain, as we've been covering. They have lagged oil, and typically they catch up. If that were the case, it yields about 140% gain potential for the pipelines just based on these moves since oil was 27. More details this weekend at NetWorthRadio.com. Overall debt levels. Now here's what's intriguing. U.S. household assets reached a record $123 trillion. That compares with a high back here of less than $70 trillion in 07. So you've got net worth of about $105 trillion after subtracting debt. Debt levels did rise to $16 trillion, a dollar record, but nowhere near a record percentage. Corporate debt was cited as something that may foment the next crisis. We're going to dive more into that. What's intriguing here, homes if we look at that, that's just better part of $30 trillion is homes. Financial assets total close to $50 trillion, and pension funds about $25 trillion. Which means that $22 trillion in U.S. debt for the federal is not excessive, and the percentage that people pay for debt levels right now, maintenance on the debt as a percentage of disposable personal income has fallen below 10%, a modern history record. So I wouldn't worry about the debt crisis yet. Where do you go from here? There are bargains, I believe, in energy infrastructure and global high yield. Come down to the Crescent, meet the team that cares. Better yet, fill out your questionnaire today at networthradio.com. I'm Spencer McGowan, your financial weatherman. Thank you for tuning in. Be sure to subscribe, like us if you do, and we'll be back next week with the best in financial news. My firm, McGowanGroup Asset Management, sponsors networthradio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations and bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.